Peace everyone, back with another market projection and technical overview. I'll be covering the same pairs that I've covered in the last few videos of this trading series that I'm doing. So we'll just get straight into it with Bitcoin as always. Last few weeks for Bitcoin has been quite stable, which is what we want to see. We don't want to see any ecstatic movements, as this will make risk much higher. So what I mentioned a few weeks ago was this key level right here. This green trend level that value managed to hit around the 13th of August, but couldn't break it. We saw some rejection off here, and we saw it go back to this level around a week later on the 20th of August. And from then it's been quite a stable market, consolidation within this area of previous week's highs and lows. As always, the dotted blue lines represent my previous week's high and previous week's low. This one that I'm highlighting right now is from 2 weeks ago, and as you can see, last week we managed to break this week's low, showing bearish pressure in Bitcoin. We've seen this play out throughout the rest of the markets actually as well. When you look into the other altcoins, you can see that they've been destabilizing in price and showing quite a bit of bearish move. So this week what I'm looking for is this bearish continuation to at least come down to this green trend level, which I've highlighted right here. Previous week's low as well was this blue dotted line. Previous week's high was this blue dotted line right here. So anything between this will be a safe haven for us, and any moves outside of this will be great indication for where the market will be going over the next week or couple weeks. Also to keep in mind, we're coming to the end of the year now, so we should see a bit of stabilization throughout the end of the year. I'm thinking by December time we could see a key level made for this year, potentially leading up to the next major bull run, or potentially we will see a very nice consolidation phase where we know that area will always be a sort of safe haven coming into 2022. So as always, I've highlighted the key levels on the right hand side, these blue levels right here. I've highlighted the trend levels, and you can also see my previous week's high and my previous week's low. All we're doing for any new entries will be analysing these levels, keeping an eye on them, putting them on the watch list, and just seeing how the value reacts to these levels before we get into any further trades. Overall, I am looking for potential another bearish move towards these key levels which I've set here, especially towards this previous week's low, as there was a lot of liquidity in the zone that we're in right now. Next we'll move on to Ethereum against the dollar. So the value of ETH right now is looking around the same. When we saw this sell-off in Bitcoin, we saw the same bearish move occur in Ethereum as well. As you can see, this massive wick. These wicks don't usually occur unless there's institutional money and institutional influence on the value of whatever asset we're looking at. So this level right here is very key for what will happen next. Same as Bitcoin, we'll just keep it on the watch list, won't be entering any new trades. If we're looking for any bearish moves, I will be entering at around this key trend level right here if we can't actually break it. But overall quite neutral. At the same time, this bearish bias may continue to get a better price for institutional buyers to come in throughout the end of the year. I will be keeping these markets updated on the Telegram group throughout the week, so make sure you go and follow that, absolutely free. Also, I do use other confluences other than trend lines, other than key levels which I'm highlighting here, and also other than the previous week's highs and the previous week's lows. So make sure you keep an eye on that, and hopefully it will allow you to be profitable over the next few weeks. Next we'll get into the dollar. As always, I'm going to look at the dollar currency index, which is the strength of the overall dollar. So last week we couldn't manage to break any of the previous week's highs and the previous week's lows. If I just go into the weekly chart right here, you'll be able to see right here. So the previous week's high, which was this candlestick's top, and the previous week's low, which was this candlewick bottom. And if you can see these dotted lines right here now, just on the most previous week, that is the ones I will be using for this week, and the previous weeks before that, which were 2 weeks ago, would have been right here. And as you can see, these two candles are basically exactly the same size, and there was no major movement outside where the money really lies. Reason being, I highlight these key levels every week, previous week's highs and the previous week's lows, because technically during the London session and the US session, these institutions and corporations are open, whether they're managing funds or whether they're trading money over the foreign exchange, whether the governments are getting involved. The previous week's high and the previous week's low can give a great idea of where the institutional money lies, and once we can break previous week's highs and break previous week's low, we can have a stronger indication that the institutions are involved with these moves happening and there's no manipulation occurring. So previous week's high, previous week's lows, if you take anything from this video, guys, I would say take that. Soon I will be doing a in-depth overview of how I actually carry out these weekly forecasts, which I do. After you get into it, it becomes very simple, as it's just projection and forecast, and we can't basically decipher any entry points until the market opens. So with the dollar currency index now, what I'm looking for is these key levels to be hit, either at the 92.75 area, which was the previous week's high, or even at the 91.95 area, which was the previous week's low. As you'll see in the pounds against the dollar analysis which I do, and the euro against the dollar analysis which I do, they will depend on how the dollar continues to move. Overall, on the long-term bias, I am still bearish, and I'm hoping for any bearish continuation on this market, which will most likely be at the 92.75 level. Furthermore, we could potentially see a retracement all the way up to the 93.15 level. How we can predict this or forecast this retracement will be using the Fibonacci retracement tool, which I'll just show you guys now. Won't be going too in depth about it, but all we will do is get the point of the previous high, point of the previous low, which was last week's low actually as well, and we can see that these key levels pop up on the right hand side. My major level, 78.6 level, would be a major turning point. As you can see right now, the 28.2% level and the 23.6% level is potentially being used as minor support right now. This correlates with this key level right here as well. So this was a very nice confluence, which bullish trade could have actually been taken to the previous week's high. Potentially when the market opens this evening, we'll be able to get a clearer idea of what entries we can take. Overall, I'm still bearish. I will be keeping this updated throughout the week, as this is a major confluence towards my trading strategy. Next, let's move on to the pounds against the dollar. Okay, so the pounds against the dollar is looking very nice as well. Last week we saw rejection at the 23.6% level. This was also the previous week's high, correlating with the 23.6% level. That's two confluences already that could have been used to take a bearish trade right here. I won't be stating whether I'm bullish or bearish just as of yet on this market, even though it's looking like a potential bearish retracement down to these levels. I'll be waiting for these blue lines, which I'll mention again are the previous week's high and the previous week's low, to be hit, and then from there we'll be able to see a clearer idea of where the value will be going in the upcoming weeks ahead. Okay, so also I do want to mention I'll be taking a screenshot of exactly what I'm showing you right here. I'll be putting it up on TradingView, where you can see updated screenshots of what actually happens after I forecast this for you guys. Over the last few weeks, we've been very accurate in terms of what we've been expecting the values of the markets that we cover to be doing, and I'm hoping throughout the end of the year it'll be exactly the same and we only get more profitable. Now going into the euro against the dollar, Same sort of bias that I'm looking at. With the euro against the dollar, I am looking at further bearish moves. As I mentioned, it does depend on the dollar, which is bullish right now, and it's very nice confluence for these bearish moves in the euro USD and the pounds against the dollar to continue. But I won't state that as a full-on theory just as of yet, because I would need a few more confluences to confirm that idea. Same as GBPUSD, I'm looking for the value to break the previous week's low and maybe do like a little retest for a new entry all the way down to our 1.1705 level, which is key in the past. As you can see right here, last time we hit this, we saw a massive move. How much was that? Let's just quickly see. 1.1700 to about 1.2250. So that's about 550 pips you could have caught just based on that key level alone. So when it comes back to this key level, we know that it's going to have a reaction to this, and we'll be able to get a nice idea of what will happen in the week ahead and the upcoming weeks going into the end of the year. Finally, I'll be going into gold, one of my favorite pairs over the last few weeks. Been very nice with the analysis that we've been doing, and I'm hoping that it continues that way. So right now, gold is at our key level of 1786.1. I've highlighted this level many times in the past. We've seen it being hit many times in the past, getting used as support, getting used as resistance. So we know this is a key level for the market. This is perfect for an opening of the week, because it gives us a nice idea of where the value will be heading. Previous week's high and the previous week's low, I haven't actually highlighted that just yet, but we'll just add one right here. So the previous week's high and the previous week's low right here. Drop it back down to the 4 hour. And there you go. Blend in a little bit. We should make that into a... So this gives you guys an idea of exactly how I pop this stuff down. So to find the weekly high and the weekly low, all I do is I pop it onto the weekly candles. I mark the top and the bottom of the previous week, drag it out all the way to my following week's projection. So the market will begin here, and I've got all the way here to sort of trade between this area. We know all of the money lies in this area. If it breaks this area, we know the institutions are involved, and we'll follow the institutions and not the retail money. Overall, quite neutral bias as well. It will depend on the dollar currency index. In my opinion, when gold goes down, we do kind of see cryptos sort of come down as well. When the DXY goes down, on the other hand, the US dollar currency index, we see an increase of value of the cryptos. So there's a lot of correlation between the markets that's still sort of being researched and found out. I believe with the strategy that I'm using, I have come across many confluences that are very simple and can be used on a weekly basis to be profitable. Doesn't have to be very complex, guys. We keep it very simple. Same key levels every week, same sort of analysis that we do every week. All I'm showing you guys on the weekly analysis is these blue dotted lines, which are my previous week's highs and lows. I show you my key levels, which I use on a weekly basis, the exact key levels that I use for my entries, my exits, and also I show you ascending and descending trend lines. So as you can see here, there's a little red one, and you can see the green one, which is the Fibonacci, and you can see these ascending trend lines as well. And that's all I'm showing you guys for the forecast and projection, because we can't be too accurate unless the market is open. Now on the Telegram group, guys, I do offer many more different confluences that I analyze on a weekly basis, including retracement levels. Of course, you can see some retracement levels right here: 78.6, the 71.60, the 88.60, and then on the bottom right here we've got the 28.2, 23.6. These are things that I cover on a weekly basis on our Telegram group, absolutely free as well. Soon on YouTube, I may do some sort of introduction, I would say, to this analysis, because this is something that I found out over the last couple of years that I've been trading, and it has completely changed the game for me. Also, I will be starting to cover how I do these ascending and descending trend lines, which stay on the chart for as long as 3 to 4 months. Every quarterly, I would say I do a updated overview on these trend lines, and yeah, so there's quite a few things that I don't cover here, but at the same time, these are the things that are fundamental and basics for you to be profitable in the market. I'll leave it at that now, guys. This video's gone up to about 15 minutes now. Usually it's like a 11 to 12 minute thing, but I wanted to cover quite a few of the things, and I wanted to mention it in this video because I've been appreciating the feedback that I'm getting. Also, I appreciate any questions that I'm getting as well. I will try my hardest to sort of guide you through the steps of what you need to do in regards to the question that you've been asking me. Make sure you subscribe for more content, as it motivates me to do this sort of free content for you guys. Make sure you drop us a subscribe on Telegram as well, where you can get access to many books, materials, even my personal trading strategies, which I give absolutely free. And drop us a follow on Instagram if you have that as well. Till next time, everyone, I hope you stay profitable. Take care of yourself. Peace.